Hi guys, hope you had a great day today. I just finished up a 4-hour lunch with a friend and spiritual advisor. Um, I didn't look at my watch one time the whole 4 hours until I was about ready to go. It was a wonderful meeting and great experience. Shout out Bishop. So my brain is a little fried, so I'm going to try to do the best I can with this recap. We got a lot to do and go over, so let's get into it. All right, we're going to start out with the spreadsheet first. I recommend that you develop some type of journal so that you can track, what you do and how you do it. I actually don't think I finished my journal today, mostly. So this little square right here will be a two trades, and they were both long. So that's a 2/0. And by the way, I am going to try to make sure I get done within a 20-minute time frame. I don't want these videos to go over 20 minutes. Most people don't pay attention after 20 minutes, maybe even 15. Somebody needs to tell ICT that. So anyway, keep a journal, and this will let you know where you're at. So these are the accounts that I'm trading off of my personally funded account, and these trades are following this one. Now, I'm sure some of you have already noticed this dinger and this dinger. Yeah, those two dingers. These went into complete disaster mode and are in drawdown. And well, I would explain what happened, but it's the usual thing that happens to people when they lose their mind and lose control and they spin out. So as you can see here, I only got $156 left on this account and $371. And once those funds are depleted, these accounts will be gone. Bye-bye. See ya. Those were accounts that I was trading prior to this journey that I'm starting with y'all. This journey is going to be driven by the funded account, my personal funds, the $1,000, which the other $500 has not hit the account yet. So any day now. And then we have 1, 2, 3, 4, 5, 6, 7 other accounts that are part of this journey. So with the help of discipline and self-control and my Heavenly Father, we'll get those accounts across the finish line. All right, so why is this important? Okay, let me talk a little bit more about this. Right here is how much I want to risk. This is like my max drawdown. Okay, and then if you take that as your max drawdown based on your account balance, this is how many times it'll take before you lose the account. Down here, this is the day you trade. This is your analysis. Basically long and shorts, whether you got a W for that trading session or not, took a dub or an L. The number of contracts for this particular one would be a 1/2. So on the first trade, I took two contracts. The total amount for the day was 116. Did we hit TP? No. And the time of day that I traded was London session. This is basically a picture of those trades. Okay. Over here in the analysis, let's talk quickly about that. This analysis reads the week. This is a top-down analysis. This analysis reads as a week as a doji. We're in the middle of the week, so you don't know how this week is going to close. But what your eyes can see at the time that I started, it's a doji. The day is bullish, 4 hours bullish. Price is in a pullback. The range in which I'm in, price is in the discount range. So let's take a quick look at what that means. So basically, I don't know if this is a good window to look at it in. I'm going to change it to the 5-minute time frame. Okay. Basically, this range, and this is one of the things that I still have problems with in determining. Okay, I think I see it now. So this range is between here and here. Okay, so this is the discount area. Price is selling. Like if you wanted to buy a pair of Jordans and they put them on sale, and they're normally $400, and they're selling them for $275. You're down here in that price range. $400 is up here. Okay, so typically the way the market moves is when price hits a premium price, it travels back down into a discount. People say, hey, I want to get those Jordans. I've been waiting for it. They're on sale. And then price starts to move back up when they go off sale. So that's premium and discount. Again, my mission in doing this is really not to teach. So I'm going to try to limit the teaching. There is going to be a lot of work that you're going to have to do on your own, research and watching YouTubes and reading books and following mentors that you select to follow. So I want to keep the teaching thing to a very small amount. There are some things that I am going to explain because that kind of helps a little bit with why I took a trade. But other than that, I'm going to try to limit that as much as possible. I used to make these analysis like a paragraph long, a page long. And it's pretty much a waste of time for me. Now, if that's what you think you should do, please do that, because that would be part of your learning journey. The doing it the long route and making all those notes helped me figure out how to condense it down to what I really need. So right now I'm down to this little small analysis, and it pretty much just gives you an idea. Well, where am I overall going to take trade? Am I going to take shorts? Am I going to take longs? Or am I in the middle? I can take a short or a long. So that's what that's for. So let's read what it says. The week is at a doji. So we're still in the week. So you really can't tell what the week is because it hasn't closed yet. So based on what our eyes can see at this point in time, it's more of a doji. That means price opened, it moved in a direction, came down, moved in another direction, then came back up. So you have that going on. When you break down the day, you're looking at a bullish candle, 4 hours bullish trend. But at this time, we're in a what we call pullback. Let's see, remember when we talked about structure, we talked about, price moves up and then pulls back. So right now we're in here on the 4 hour time frame. price is discounted, like we discussed. It's at the bottom of the range, and I'm neutral to slash bullish. For the day, I consider that I got a W. I won the day. Now, I am not talking about money. I used to focus on money being considered whether the day was a W or not. But my accountability partner and I, we met at the Forex Summit a couple of years ago. And we have gone through some stuff. And we finally had, grew a little bit in our maturity as far as traders. And it was like, really, for the most part, it's not about the money, it's about the process, So the W, whether the win is, did you follow your plan? Did you manage your risk? Did you have the right mindset when you took the trade? Not how much money you made. If you took a loss and you followed your plan and you did what you were supposed to do, you aligned yourself, your behaviors with what the market was doing, you were reading price action properly, and you took a loss money-wise, we still consider that a dub. So that is a win. Reframing that kind of recenters where your focus is. And as a beginner, you want your focus, I believe, to be on the process and not on the money. Okay. Now, yeah, we're in it to make money, and that's what this is all about. But if you follow the process, the money will come. If you don't, it won't. So focus on the process is what my accountability partner and I have come to. Then we track whether we hit stop loss, take profit or not, and then the time of day. Sometimes I do stupid stuff like trade out of my time of day. My Asian market is not the market that I usually trade in. The market is consolidating during that time, and it's ranging. And unless you're a range trader, you might do best to stay out of that. If just don't trade. Yes, the market is open for a great deal of time, and there's lots of opportunities. But you have to figure out if you're a range trader, then Asian market is your time frame. You have to figure out what you're good at. Like what does your strategy work best in? What session does your strategy work best in? London, New York can be a little tough because the volume is high and price moves fast, and you have to think fast and you have to be listening. There's a lot of decision making involved. So that is a good introduction to my first trade, which was a complete and total nail biter. It was tough and it made me really nervous. So let's start out with this. I used a higher time frame to figure out where I wanted to take the trade. And then I honed in on the lower time frame for watching price action and watching, what was going on. I did not base my trade on the market structure on the lower time frame. Okay. I based it on the higher time frame, and then I used the lower time frames to pick an entry point and watch price action. So I believe on this trade I was on the 1 minute time frame. I looked at, let's see, let's go to the 5. That's the 5 minute time frame. Sorry. And so I was looking at this time frame to determine pretty much where I wanted to get in. And let's look at, so I took this trade because it fit my narrative. And the price moved into a place that I could afford. Okay, so looking at where you can afford. So my stop loss was $34. Let's try to see if we can look at that real quick on a different spreadsheet. So on this spreadsheet, I know that's probably kind of hard to see. Let me adjust it. This spreadsheet is kind of like my risk management area. Okay, so I try to figure out. It's hard to calculate all of this stuff in your head as you're trading. So you kind of need something to help you figure out where you're at. So I had $90 that I wanted to spend. That was roughly a 10-point stop loss. And it tells me I could have done 4 contracts. The reason why I only did 1 contract is because I entered this trade at 8:12 and news was at 8:15. So normally they tell you don't enter trades before news, and that is absolutely the best idea. I am a technical trader. I'm not a fundamental trader, but I've been trading long enough to kind of understand that there are like 3 types of news. There is the news that follows your market structure. And if you're in a trade and it's following market structure, it'll take you, the news will catapult you to where you want to go. And that's kind of what I was thinking. And then there is the type of news that is basically a liquidity grabber. So what's liquidity? Liquidity is your money. And liquidity grabbers are looking to stop you out. So, and what they tend to do is they tend to whip. So as they're whipping, they're slapping traders on the way up. And when they come down, they're slapping traders on the way down, taking stop losses, just slapping and taking. And we're not talking about the little like that. We're not talking about that. We're talking about a slap that kind of dims your lights a little bit. And kind of stuns you. You're like, so that's why they tell you don't trade news. But anyway, I liked the price action before news, and it's $34. It wasn't a huge risk. If I lost it, I was, no harm, no foul for the most part. So I was betting on the idea that this was going to catapult us up. There is another type of news, and that news again just kind of follows structure, but it doesn't move. It's not going to move you like you would want it to. It's kind of like basic, just a little bit more than a normal candle. So those are the 3 types of news. This one was a hybrid. This one was a little bit of a mix between the 2. This one. I'm right now on a 30-second time frame. Okay. And here's my trade here. This is a better placement of the take profit than I had. So I'm kind of showing you if I had my take profit in a different area, I would have made more money. So this one was a, I guess that's the 20 minutes. Yeah. Okay, so this one was the 15.5, and it was basically a one-to-one, and this one was the actual trade I ended up with was 7.25. Okay, so let's take a quick look. So there goes that plan and try to stay in the 20 minutes. So price. And notice, yesterday we talked about the cup. Yeah, I'm taking this trade. We're going to talk more about moving averages later, but keep in mind, moving averages are based on history, and they're like a confirmation of, yeah, you're good to go, or no, you're not good to go. So here we are. This is 8:15, and let's look and see what happens. So you can see that spike up. So this is that whip, and then now notice what's happening right now. We're ranging. Okay. So if you go to a higher time frame, this all pretty much happened within a couple of minutes. Let's go to a higher time frame. Let's go to a higher time frame. And one more. Okay, so you see how this candle whipped up and whipped down. So I was watching live trading one time, and this trading guru and that was the other thing I didn't mention. This wasn't NFP, non-farm payroll, so I wasn't really as stressed. Non-farm payroll will whip like 50 points up or more, and then whip back down 75 points or more. So this wasn't non-farm payroll, because I would have gotten stopped out if it was non-farm, no question. But this trader placed a buy stop at the top and a buy stop at the bottom. And what he was thinking was going to happen was it would hit, if it was going to drop, if the news was going to drop price, it was going to hit the sell stop and continue on, and he was going to make a boatload of cash. And vice versa for the bullish side. So he, non-farm, just whipped him into a trade and then whipped him out, and he lost $25,000. And I'll never forget that. And I did the same thing he did, and I was just like, I guess he was trying to hedge. I can't figure, and you don't want to figure out what he was trying to do, because that's not a strategy, right? That's gambling, right? So I followed along with him, and that was just bad advice. So you got to think for yourself, and you got to figure out this thing, and use your best judgment when you take trades. He said, I just lost a Honda Civic. So he's fine. He has plenty of money. So that $25,000 was like $34 in my trade. So he could afford to lose it. Back to this trade. So we're going to go back down to, I'm going to go back down to the 45-second time frame. So as you can see, price is kind of bouncing here. Let me go to, I'm going to say, and this is the nail biter part of the trade. This is the part where I'm like, I think I regret. That was at 8:30. That was okay. So news was at 8:15. I can't believe I didn't get stopped out. News was at 8:15. You can see 8:15. There wasn't really a whole lot of action, but at 8:30. Okay, so what that is volume was kicking in. This is normal volume trading, and since there was news, this is what you don't want to be in. This is the part that was really scary, and I was sort of regretting getting into this trade at that point, even though it was $34. I was still regretting it. Here's the thing I want you to notice: there is not a body on any of the swing lows yet. So we got a swing low here. Here, let me see if I can put it. We got a swing low here. We've got a swing low here. We got a swing low here. So there's a lot of price is punching. It's punching the downside. Now, what I was trying to keep up with, and keep in mind, I'm on the 45-second time frame. There's also a swing low right here. Once a body of the candle, and you'll have to chat GBT or Google or whatever, the body of a candle, you'll know what I'm talking about. That's a warning, in my opinion. Okay, that's a warning to get out, because once that body gets laid on that swing low, it's kind of telling you I'm going to head in that direction. Now, what could happen is you could have a fake out. Price puts a body on it, and then price puts another body on it, moving in the other direction. Okay, so this is what I would call a fake out. And then you'd have your swing low. Let's say you had your swing low right here where the arrow is. Okay, that's where your swing low is. So you could have a body on it, and then you could have a body come back, and then head up. So, boom. Boom. So, why didn't I close the trade? Sometimes you have to have confidence in the decisions that you make, and you know that confidence will wane. It'll get stronger and weaker in the trade. But if you're listening and you're prepared, I had my hand on the trigger. Stop loss was down here, so really I had to just accept it if price decided to take me out. So there's my stop loss, right? And then what happened? Boom. I started getting worried again, right? I was like, okay, so we got a, oh, and this happened. I was just talking about this. We got a swing low right here. Okay. And that concerned me. Now, none of these swing lows had been closed on yet. So that was telling me, just wait it out, see what happens. Then this fake out occurred. Boom. And then price started heading up. All right, let's keep going here. Still worried about this trade. Now, this is not a reversal, but if this pattern was on the bottom side and it took out a swing low, you know, the appropriate swing low, I'm not going to get into that right now, then this would be what I would call, you know, an entry for me, because I like reversals. But it's not. It's more of a continuation. This is more of a range than it is a reversal pattern. So, but it looks the same. And so I'm thinking at this point, this trade is, I started getting worried here, right? So I moved my stop loss up to here. And I thought once it hit this opening price point, I thought we're done. You know, I didn't even wait for any of this. But to show you how the trade played out, let's go back up there. You see that? Came down, would have tapped my stop loss out if I didn't protect my trade. A little something is better than nothing. Okay, so this trade made me $15. And I know I'm going to lose the majority of my audience, if you will, because yesterday I made $2 and today I made on this trade $15. And there is nothing sexy about these profits. My goal is not to show you how to trade so that you can buy a Lambo. My goal is to just try to share with you things about market structure that I know and things about watching price action, and hope that you learn that. I learned market structure or started trying to figure out market structure towards the end of I'm still learning, but more towards the end of my learning phase. I think that should be at the beginning. If you are an experienced trader, you probably already know all of this. That's fine. You're not really my focus and my mission. My focus is, but I'm glad to have you watch anyway. My focus is more of those who are in my position, who have been trading for a little while, who are still not seeing the results that they want to see, and focus on the market structure. And then for beginners, I'm hoping that the placement of the learning process is first with them. So let's do that. Let's talk about my mission, if you will, for a second. My mission is basically made up of two things. The primary mission is basically to go over stuff like this. I'm going to go over psychology and all that other stuff and things that I've experienced in trading. But picture me as a little boy, okay, raking his leaves in the backyard. And our yard was big and we had lots of trees, so we had lots of leaves. So it would take me hours to rake the leaves. And picture this huge pile of leaves, okay? And I used to love to like fall back into the pile of leaves because it's cushion. I used to love to fall back, and then I'd rake them back up into a pile again, and I'd crawl underneath the pile and hide. We didn't have Xbox back then. We didn't have, Wii, and back then I don't even think we had Atari yet. So my childhood is probably very different than a lot of yours. But I would play in that pile. I would roll in it. Picture that pile being every leaf being $100 bill. And prop firms are just rolling in it and hiding in it, and they're having a good time. The same time that I had when I was a kid with leaves, they're having with your money. So, and my money. So my thinking is, my part of my mission is, can I share some information to help people not be, I don't want to say the word victim, but because you're volunteering to do this, you bought the challenge. That was your decision. So you're not a victim. But can I help people mitigate their losses, as traders? So I know that the prop firm game is pretty much, and if you don't know this, then it's like Vegas, the odds favor the house. When you take a challenge, the odds favor the prop firm because of the rules. Okay, the game is rigged. That's why only 2% of people who buy challenges get a payout. So That's a little disturbing to me. And if there's anything I can do to help increase the number of people that get a payout, then that's my mission. Not to teach, just to give you a little bit of my knowledge that hopefully will improve your chances of passing a challenge. This challenge is based on $3,000. So every day that I go through, I'm trying to inch towards the $3,000 mark. And there's different phases of the challenge that you're going to go through. We're in phase 1, which means that you have to kind of go easy on the gas right now. You kind of want to go easy on the gas, build yourself up a cushion. We'll talk more about the phases later, but that's the mission. Those are the missions. And then the second one is obviously I'm putting a lot of time and effort in this. I'm hoping to monetize this somehow. Maybe YouTube will slide me a few bucks here and there. Okay, let's move on to the second trade. Second trade, I'm going to go to the 5-minute time frame, and we will move forward. Ooh. Now that was really ugly. Okay, look at this. It's hard to see. Look at that. Dang. NASDAQ was just merciless. Merciless. And we're in a range. Okay, so let's go back. Let's go back over here. When I first looked at the market, okay, let's zoom out. Let's see if I can take all that off. When I first looked at the market, it was 5 o'clock. Okay. 5 o'clock. I was looking at the market at 5 o'clock. All right, let's see. And 5 o'clock was right about here. And so the range, let's go to a 15-minute time frame. 15-minute time frame. 5 o'clock. Today is the 30th. Okay, I'm over here. Oh, yeah. That's what I saw. Okay, we're 5 o'clock. I took one look at the chart and I was like, and you don't develop that, or a lot of people don't develop that ability to look at the chart and say, nah, I'm staying out of that. That's bad news. I'll get slapped in that range. Now, if you are a range trader, I don't know if I should go into this or not, but I am, just for general knowledge. Okay, if you're a range trader, you don't want to diddle in the middle. That's kind of what you hear people. You don't want to diddle in the middle. You want to tread on the edges. So picture a football player. You got out of bounds on both sides. So in the middle of the football, you can get, you can get faked out. You can get juked out, right? And player, guy with the ball is in one direction, and you're going in the other direction. That's what happens in the range when you're in the middle. If you're on the edge, where the player can step out of bounds, they can't. If you're on the right side of the field, if you're on the edge, you're not going to juke yourself out of bounds, right? Pretty much you can really only go, the player can only go one direction. So that's what you want to do when you're in a range. Now, the market is not a football player. If the market wants to go out of bounds, it will. Okay. Market does what it wants to do. It doesn't follow rules like we need to follow rules. So market does what it wants to, but that's the general principle. You want to take the trade. If you're in the range, you want to buy low, sell high. Or if you're on the high side, and this is the premium end, you want to buy high, sell low. Okay. trade 2. This is taking much longer than I thought. I'm just going to go over this trade real quick. It was at 10:18. I entered this trade. I took another buy because I liked the price action that I saw, and all this craziness was already kind of behind us. So I said, why not? It was a trade I could afford. All right, so let's go over here real quick. I had already made $15. So, you know, if I take $90 and I lost the 15, pretty much it was a $75 trade. And how many pips? Not pips. Sorry, 100 points. This is a 25 point. So the stop loss was 25 points. So to get back down, let me go back up to 90, 100. Oh, wrong place. So I'm going to spots 100. I'm doing something wrong. Let's go back down to 65. Let's go down to 55 and go down to 50. Okay. So with my $15 that I already had and this $50, I was in I had $65. So, if it took all 65, well, if it took all of the 50, I still would have $15. So why not? Why not take it? Managing. This was been my affordability for the trade. Go back to the trade and see what happens. As you can see, trade climbed up and then it came back down. I was aiming for this. But pullbacks make me nervous because pullbacks, as you can see, market structure is telling me roughly here that, yeah, I'm gonna go down, but it faked me out and moved up. So this would have been the target. I'm still trying to learn how to manage my anxiety in pullbacks so that I could, so how do you do that? You are in a battle. It's a war. And it's real. That's real talk. When you're trading, you're in a war. And when soldiers are on the battlefield, based on my TD knowledge, they hide behind something that if it gets shot, they don't get shot, right? They hide behind a rock or behind a tree or whatever. They're hiding behind. So what you have to do is you have to, through back testing, shout out to Dave Teaches, back testing. Okay. Find a place to hide your trading. So let's say what would have been, to know this, you kind of have to get to know NASDAQ. How does NASDAQ behave? What do they not mess with? What do they not go after? There's certain things it doesn't go after. So you have to hide behind that. So this swing low would have been a good place to hide. And if you lost, you had 2 contracts, there's 3 there. So 2 times 3 times 2 is 12, $12. Pretty much break even. It's a loss, but it's no sweat. Or you could hide behind this. You can't see that. Let me see. You can't see that. And I apologize. I don't have those high-tech screens and stuff that you'll see other YouTubers have. So you could hide behind this swing low. You could hide behind this fractal, but you can see you got tapped out there. But still, you got tapped out with some money. You could hide behind. You can figure it out. Okay, so figure it out. was like, and since we're at the beginning of this journey, I'm like, I'm trying to save capital. I'm not trying to take a chance on price moving to this point that's way up here. I'm gonna trail my stop like as it goes up in the places that I can hide. I first hid behind this fractal, and then I hid behind this low point here. And then I think I went up to, like, if price comes past this opening price point for this candle, I'm out. That's managing the trade. Now, once I get to a certain level of money, and I might take a little bit higher chance on these pullbacks, but right now, I don't have $1,000 in there. Not that I'd want to give that up. I might take a little bit more of a chance. Now, some of you might ask, well, why didn't you just let the trailing drawdown stop you out for the trade? Good question. All right, and I'm going to explain why. So, as we talked about yesterday, this is my money, okay? And this is price moving into profit. This is the trailing drawdown moving. I don't know why I got that square there. This is the trailing drawdown moving up. I stopped the trade somewhere. Let's see if I can mark on this. I stopped the trade somewhere in here. Okay. If I let the trailing drawdown take me out, I would have lost this amount of money. Okay. So I saved capital by taking the initiative to get out of the trade early. We are way past what I wanted to do in terms of time. Let's go over and make sure I've covered everything that I wanted to discuss with you. All right, I think I did it. I didn't go over the why the two contracts on that. Oh, I kind of did. But let's do this. Let's get ready to close here. What I want to do is, because MOG stands for Man of God, I want to close with a prayer real quick. Heavenly Father, thank you for this opportunity to serve others, to share my knowledge. I hope and pray that you bless, asking that you bless my mission. Help me to achieve success in this mission. And success is just helping people along this journey, giving them the knowledge that I have, not as an expert, just as someone who has a little experience and wants to share what they know. And hopefully they will take that information and grow, be prosperous and successful in their journey, along with myself. So please keep us in your care and keeping. Please bless all those that watch and support the channel. And I pray all of this through the merits of your Son, Jesus Christ, through whom anything and all things are possible. Amen. So that's it for today. Tomorrow's another day. Let's go.